our private sector, Nigerians in Nigeria, Nigerians abroad, Nigerians living in Nigeria with money abroad, you need to bring it and invest it. As a coordinating minister of the economy, working with my colleagues across government, my job is to ensure that macroeconomic reform translates into tangible benefits and improvements in the lives of Nigerians, improved availability and affordability, of course, food, expanded access to housing, affordable mortgages. Mortgages now being issued at less than 10% interest, which is of note at this particular time of relatively high interest rates. We've heard that 2026 is a pivotal year. Ladies and gentlemen, it does, I agree, mark a pivotal moment in our journey, because after 2 years or so of implementing what we all agree are transformative and politically difficult reforms, this administration has delivered what I would say significant macroeconomic stabilization. We saw the characterization just now that we're in stage of consolidation. The way we see it is that as the first stage was attacking and dealing with the major distortions that had held the economy back for so long, and we all know what those were. And that has followed, we feel, stabilization. When you look at the growth trajectory, when you look at the success in terms of the monetary aggregates, that we feel is a sense of stabilization. And we can talk about it, whether it's consolidation, whether it's but the key thing is that after these years of economic progress, let me say, we are now at the threshold of stabilization, consolidation, but it's a phase that demands resolve, discipline, and policy consistency as we go forward. And the central message is that Nigeria cannot afford to pause, cannot afford to retreat, cannot afford to sleep. And that's a big undertaking. And success here will determine whether stability is converted into sustained growth, whether growth delivers productive jobs, and whether poverty is reduced at scale. If you look at the figures that we were given just now by the chief economist of NESG, he said reduction. He said 100 million and an arrow going down. I interpret it as lifting 100 million Nigerians out of poverty before the end of the decade. That's what the figure he gave us, and I think is a worthy target. So we need to position Nigeria firmly as a competitive regional and global player, capable of feeding itself, housing itself, and of course, of powering the Nigerian economy. The country used to be one where, as a young person, you look at what is in front of you and you are forced to say, there are many distortions. Let me go and attack, and let me go and see if I can benefit from one of them. Whether it's access to foreign exchange at below market rates, one way or the other, directly or indirectly, or access to subsidized petroleum products at one stage or the other of the value chain. That is no more. So the young people of Nigeria now have a much more level playing field. And I think the one thing that we also, in our conversation, need to focus on is the demographics and empowering young people, digitally in particular, to be an important aspect of the global value chain, of the exports that can now be done, export of services across the internet. just let me say that, of course, we have our development partners here. Our efforts have not gone unnoticed, and we had a very good reception at the World Bank annual meetings last year. And on top of that, we have moved off the grey list. And just yesterday, we moved off the EU, what the EU called, I think they call it the high-risk third countries list. Which means that without that, the EU companies and institutions will be reticent to do business with Nigeria. We are off of that. And of course, we have had the benefit of improved ratings by the various rating agencies. So as we heard earlier, real GDP is up, but also 27 sectors have grown above 3%. So yes, manufacturing and agriculture are not where we want them to be, but 27 sectors have grown. People are finding areas in which to operate and to thrive. And the inflation story, we don't need to say anything more. The graph says it all. Very well done, the monetary authorities, my brother, governor of Central Bank, and whole team. And the inflation fight, it's everybody's fight. So as interest rates go up, the manufacturers, the investors feel it, government feels it, because our debt service costs, of course, reflect that. But we all agree that the first fight is the fight against inflation, because that's where, in particular, the common man suffers the most. We as Nigerians, we are required and we will have to fund our own businesses. We will have to have savings instruments that allow at all levels, at the retail level, people to access profitable investments, and it will be mainly through the stock market. How would someone invest in a Dangote refinery that's coming to the market, if not through the stock exchange and probably through a fund that gives them access at a very, very low level to that type of investment that will give unearned income, that will give dividends to them, and thereby provide access for financing across the board. Nigerian money will need to move into savings and investment at all levels for us to grow this economy. That's why that market capitalization is particularly important, and we need to see further growth in that area. And, all these outcomes, they do reflect deliberate policy choices, and they do create the macro and fiscal conditions required to stabilize food prices, lower the cost of capital, expand mortgage lending, scale electricity delivery, and accelerate road construction, just to mention a few, across the Federation. And as we have said, our task is now to consolidate those gains so that stability becomes prosperity. And of course, prosperity becomes shared prosperity, where millions are lifted out of poverty. In terms of fiscal performance, we saw the risks were highlighted. We need to strengthen the foundations amid challenges. Despite the global headwinds and domestic constraints, Nigeria's fiscal position did demonstrate resilience and, I would say, marked improvement, and reflecting an attempt at disciplined management and transparency-focused reforms. Of course, the fiscal deficit at 3.4% was relatively stable in 2025, just above the Fiscal Responsibility Act stipulation of 3% maximum. So there's a fight to get it down to within the level stipulated. And of course, we've said debt service was highlighted as something that we have to keep battling with. The debt to GDP ratio is more than acceptable. And when we look at the public stock of debt, it's 100, in Naira terms, it's 152 trillion, just over $100 billion. But Of that figure, 30 trillion, and I've just referred to transparency and accountability, 30 trillion was outside the books, was brought in. Those were the ways and means that were not they were just ignored before. And now we have put them inside as part and recognize that this is part of the debt stock of Nigeria. Another 50 trillion or so is accounted for by the fact that it's the dollar denominated debt. When the exchange rate moved, of course, that will move. So you've got 50 plus, so out of 152 trillion naira, 80 is just adjustments. It's not new borrowing at all. I think that's an important metric to bear in mind, that this adjustment process has meant fiscal realities which we have to deal with. In terms of the budget of 2025, is still being rounded up. We just as at the third quarter, we had revenue was still 61% below the budget, and likewise expenditure was 60% of the annual target. And while non-oil revenue performance did improve significantly at the federation level, overall revenue was constrained by shortfalls in oil and gas receipts compared to where we had budgeted them. Despite this, the president did prioritize fiscal federalism. There again, the transparency, the accountability to ensure that the federation account operated as it should. What belonged to the states and subnationals went to them. And as we have seen, it significantly strengthened the financial position of states. They run budget surpluses, over 3% budget surplus, and it allows them to be able to do so much in terms of social as well as economic spending, health, education, public services. In terms of the capital budget, we saw that the budget is at the end of the day, is a law of the National Assembly, and they extended the 2024 budget for the whole year to ensure that, I suppose, that projects were completed. And that meant that in aggregate, capital expenditure in 2024 reached 11.1 trillion, 2024, 2025. So that was 85% performance. 2025 capital below that, and that reflects that the government's emphasis was on completing the priority projects of 2024. And despite these fiscal challenges, important to note, all the statutory obligations, foreign debt service, domestic debt service, salaries, pensions, were all met by the government, an important promise of the president. And I think I will say that these outcomes, they underscore a commitment, really, a promise of transparency, structural reform, fiscal discipline, and trying to lay the foundation for rapid, sustained, and inclusive growth. And the 7.7% target that the government has set itself is because that would be about more than double population growth. And in order to lift people out of poverty in their millions, you need to be at least outstripping population growth by that amount. The outlook for 2026, the economy is projected, we do project it to grow at 4.68%, in line with the medium-term path to try and get to this all-important 7% per annum growth, as well as a US $1 trillion economy by the end of the decade. Inflation, which we have said we need to get into single figures, is expected to average 16.5%, and the exchange rate 1,400 naira per dollar. And we get this, I think we're just to tell you where the figures come from. It's those in the medium term expenditure framework, which has been approved by the National Assembly. So that's where they come from. The 2026 budget, aptly titled Budget of Consolidation, Renewed Resilience, and Shared Prosperity, reflects Mr. President's commitment to ensure that macroeconomic gains translate into real improvements in the lives of Nigerians. And we cannot overemphasize that it is not the metrics, it's not the percentages, it is the experience and the improvement in the lives of everyday Nigerians. And as I've said it before, in terms of electricity supply, food availability, and so forth. So the key aggregates of the 2026 budget: revenue, just about 34 trillion naira, expenditure, 58 trillion naira, and the deficit is about equivalent to 4% of GDP. And that just reflects the scale of our development needs at this stage, the ambition. And in giving those metrics and those figures, I will also emphasize that at the heart of what we are trying to achieve is that after removing distortions, after stabilizing, and as we say, consolidating the economy, it's a dash for growth. And that is based on investment. So the key is to put in place a framework that now encourages investment across the board. And I'll put it to you this way. There was a time, long time ago for me, started, the time anybody starting out would have to look and say that the best bet is to take their salary, change it into dollars, and it's a one-way street. For a long time, that was the refrain, that was the narrative. That's what Dr. Homishakin would have said to you, that, well, you can do a lot worse than this. That is now no longer the case. If you had changed your salary at 1900, you will now having to buy back the naira at 1400. Instead of 1900, you have 1400. So it's clear that the incentive is to now go out and find a productive niche in this market, no matter if you're starting out and you are good in technology. There's 90,000 kilometers of fiber optic network being put in place in line with in conjunction with the World Bank project and the Ministry of Communications, so that we empower that whole generation, which is half the population is under 19 years old. So those are the people to empower, and they are in the fastest growing area. So this is the way in which, when we say investment is the way to go, the environment for those investments is much, much better now than it was before under the distorted system we had. So the budget is anchored on 4 objectives: to consolidate, as we've said, to improve the business environment and investment climate. And I saw the SABRE, the World Bank project, in that improving the operating environment across all the 36 states. To strengthen human capital while protecting the vulnerable through social protection, and of course, to stimulate growth. One of the things that is critical is that on the fiscal side, we rely less on debt, which means boosting revenue, particularly government revenue. And in that, there's a major, major thrust. And I must say that I think we all recognize that when you do the kind of reforms which Mr. President is undertaking, there are winners and there are losers. The winners are the economy as a whole, but the losers are those that were benefiting from the old system. So it's one way or the other. It won't be a one-way street. There will be some element of, I would say, difficulty in pushing through these reforms. But we are digitalizing revenue collection for real-time monitoring, application of technology. Federal Treasury receipts are going to be issued to curb leakages. There's a central billing system that allows full reconciliation. And when you ask me, what does that mean? I'll say that when somebody is given a assessment of 100, if they pay 20, unless you have a central billing system that reconciles, it will just say that they are paid. And then unless you have one single receipt that shows how much they paid, you just know that they paid. But now we'll know that they paid 20, and everybody in the organization and they themselves will be chased until they close that balance. That's the difference that this central billing system will make. And also, there are things like direct deductions that are being made to government revenue. Direct deductions before passing on those funds. These are the types of leakages and loopholes that will be blocked and stemmed. And of course, as you have said, that the implementation of the new tax law is its aim is to be pro-poor, to broaden the tax base, simplify compliance, and of course, it exempts, and we must remember, it exempts essential items, food items, and small businesses. So the priorities in 2026 to enhance competitiveness through sound governance, achieve agricultural productivity and food security. And there's a point now to help the farmers because prices have come below, in some cases, their costs, and that is being addressed very, very urgently in order to ensure that we encourage continued investment in food production. And of course, accelerating infrastructure development and energy security and investment in human capital. Public resources are constrained. Global capital development, concessional financing, but even financing multilaterally is retreating. The SDGs are not going to be met. You need $3-4 trillion a year. It's not going to come before 2030. We've seen how multilateralism is retreating. It means that we have to rely on our own domestic resource mobilization. That is a challenge that we have to accept. And the private sector is indispensable, particularly in the face of a move back from concessional financing and multilateralism. Our private sector, Nigerians in Nigeria, Nigerians abroad, Nigerians living in Nigeria with money abroad, you need to bring it and invest it. Nigerians abroad, they need to invest their money in their homeland. Nigerians in Nigeria need to save and take opportunity to invest. That is really at the core of our effort in a world where there's no real substantial help out there at affordable rates. And of course, government's role is to provide the basic macroeconomic stability. So, ladies and gentlemen, in conclusion, the task ahead is immense, but so is our resolve. We will, God willing, not retreat from economic transformation or lose focus or even have fatigue setting as we have been warned. And responsibility is very clear to translate that stability into inclusive, job-rich growth that delivers for the average Nigerian and all of us. And as I said, we need the private sector, institutions such as the Nigerian Economic Summit Group, and we'll ask you to continue to work with government the way you are, and that together we can consolidate the gains, we can sustain the momentum of reform and build a Nigeria that is resilient, that is competitive, and that gives us all a very, very good future. Thank you, and God bless.